Good morning and welcome back to Almus Market Mornings. Yesterday, Europe delivered contrasting policy moves. The Swiss National Bank cut rates for the sixth consecutive time, taking policy to zero after Swiss inflation slipped to 0.1%. The Bank of England, meanwhile, left rates unchanged, though it signaled on August move remains a possibility. Markets took both in stride, leaving the dollars firm. Here at home, the rupee has edged towards the weaker end of its recent range against the dollar. Morning, JK. What key levels on USD INR should listeners watch in the days ahead, and what would be the trigger for a decisive break either way?
Hey, good morning, Swaraj. First on to the central banks. Yes, I think after Fed, we are still watching some of the central banks' actions. As you mentioned, Swiss National Bank cut their rate by 0.25%. Now they're at 0%. And if you go by what they have been saying, they won't even hesitate to go to negative interest rates. This is because their inflation is very, very low, and also Swiss franc has been too strong. The too strong Swiss franc is also adding to disinflation in the economy. So the next move can be minus 0.25. And in fact, there was an expectation that they could do that yesterday as well, but they did not. Yeah, another central bank on watch was UK. They held the rates unchanged. Again, the voting pattern led to expectation that the August there will be a rate cut. Market was expecting 7 to 2 for a hold, but it turned out to be 6 to 3, meaning three members wanted the rates to be cut yesterday. So that's given rise to lowish expectations from Bank of England. The Bank of England chief's statements also indicate that they are, inclined towards another cut in August, but he is not giving a definite guidance on that. Of course, there was also a surprise cut from Norwegian Central Bank by 0.25%. Yes, central banks are on, barring BOJ, they are on a, dovish path. And of course, this is also happening at a time when tariffs related inflation is likely to go up. But I think for the moment, people are concerned about growth and also, inflation right now hovering near target. However, the case is different in case of Bank of Japan, where even today we saw the inflation rising to 3.7% from 3.6%. Although the BOJ central banker has mentioned that they would go by the data that is coming in, and if data indicates they have to rise, they will rise, but they will not hurry into it until the tariff issues are resolved. So that is what is stopping the central banks. Now, yesterday was the US holiday, so there wasn't too much of activity in the markets, but then markets were on guard for any new development in the Gulf. Currency markets were almost entirely focused on Middle East to see if US gets directly involved in the conflict and whether things get to a wider war. However, there was no clue, and although Iran and Israel have continued to bomb each other, and human casualties have kept increasing, concerns remain as reports say US officials are preparing for a possible strike in Iran in the coming days, and they have moved some aircraft and ships from their bases to West Asia for that may be vulnerable to a potential Iranian attack. Now, subsequently, yesterday there was a press statement from White House which said that Trump will make a decision on whether to attack Iran within 2 weeks. And though as I said, Iran and Israel continue their drone, air, and missile attacks, the markets are hopeful that this 15-day period is taken as giving a chance for negotiation to move positively, and then this could lead to some sort of a pause in the attacks, or and getting even more serious, because we are now talking about US using their special equipped warheads to attack the below the ground nuclear facility of Iran. That's a very dangerous thing for the markets. So in fact, the two risks for the market are, as I said, if the underground facility of nuclear in Iran is attacked. Another is if the latter attacks the ship movement through the key port of Hormuz, and that can lead to a major oil shock for the global, global markets and global economies. So this is what the markets are watching. Yes, after the statement that President will take 2 weeks to decide on whether to go into an attack or not, helped some recovery in the sentiment. Oil price, Brent particularly, came off about nearly 2%. And then we also had dollar, which had recently acquired a new, fresh safe haven status, also fell back a bit, not much. Euro recovered back about 1.15 particularly, and the Asian currencies have been a bit stronger. Interestingly, today in the currency market, we saw the Chinese central bank fix their central rate below 7.17. This is for the first time after 19th March of this year. And that is significant because in the last 2 months, they have been gradually reducing their fixing rate. Of course, it was also accompanied by dollar index coming off. But then the yuan, very, very mild pace coming down is also an indication that, strength of Asian currencies going forward, of course, subject to other global issues that are underway. Stock markets were closed, so indices in most centers, of course, lost over 1%. Rupee, it hit the key resistance at 86.70, which I was mentioning. In fact, exceeded to hit even 86.90. But at those levels, we saw renewed entry from the central bank, pushing it down to 86.73. So the daily close was below 86.75 key level, which I was mentioning. And also exporter interest was rekindled at those levels because we have seen almost 1.5% movement in this month. That gives some, encouragement for exporters to sell as well. But they were waiting for some clue, and maybe once the central bank shows its interest intentions not to allow rupee to weaken further, the exporters also get into the act. And why not? I think this is a level where central bank has to be on guard, because it's not just the oil price which has gone up by 12 to 13%, but also rupee weakening further would add to the inflation. Now, central bank has already front-loaded their rate cuts, 1% cut in the last 3 meetings. And if you see inflation rising again, that actually puts them in a very it will be a very difficult thing to reverse their decision so early. So they would be liking to contain the rupee weakness in view of the inflation concerns. And interestingly, rupee compared to all other currencies swiftly moved closer to its all-time low against the dollar. So that's another point. So not much incentive for even importers or others to buy dollars at these levels at 86.80. So unless we have some new major escalation in the global geopolitics. So I am seeing these levels as offering good resistance, waiting for more developments. I would think that exporters will use this rally in the USD to hedge themselves. Thank you.
Thank you, JK. And just quickly summarizing, Swiss National Bank cut its rate. Bank of England held its rate steady. Today's morning data shows Japanese inflation rose to 3.7%, which would keep the BOJ on its toes. Geopolitical tensions are keeping everybody busy. President Trump stating that decision to attack Iran will come in 2 weeks. Earlier yesterday, we saw some sort of dollar weakness there, but then again, now we see today morning euro has recovered above 1.15 in early trade. Interestingly, the Chinese yuan fixing was below 7.17. This was after some time. When it comes to rupee, yesterday we weakened to 86.90, but central bank intervention led to a close below 86.75. That's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with the fresh round of updates.